It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another Real Estate Podcast, your largest real estate podcast in Australia. We're doing this 7 days a week, and it is the weekend, which is nice, as we talk your property from Rockhampton to Wagga Wagga. Now, there's a combination, and covering every city, every town in between. Yes, Saturday morning, it is April the 26th today, and despite interest rate cuts and first home mortgage schemes, the average wage earner in Australia still can't buy a break, can't catch a break, can't afford the median-priced home. It's a theme that we have been talking about this week, especially in cities like Sydney and Melbourne. Buyers need dual incomes. Also, family help, that is a nice one if you can lean into that, or above average earnings just to get into the market. And it's true that the property mortgage market is now very much aimed at the two incomes for a household, not a single one. And if you are on your own, you have very much limited choices, and you are being penalised, it would have to be said, by the way that the wage growth has fallen behind. Well, it is a Saturday morning, time to catch up with somebody who's roving out there across Australia. That is Anthony Landau, Managing Director and Mortgage Broker at Equilibria Finance. And Anthony, whereabouts are you?
Yeah, I'm in the Victorian High Country at the moment. Had a lovely view of Mount Bogong this morning. Just having a little bit of a working holiday, if you like, over this long weekend period.
Yeah, in the back seat of the motor vehicle too. So that's taking everybody in behind the scenes this morning. So well done for that. You wanted to make a comment. You know, as I was saying, it's really sort of a two-income situation as far as the mortgage market is concerned.
Yeah, it's really challenging affordability. That data's pretty stark. There was some additional data as well in and around that identified that national house values have surged 39.1% over the past 5 years. So no wonder salaries are not keeping up with that sort of price increase. Affordability is a major, major challenge for not only first home buyers, but for anyone upgrading or looking to get into the market.
Yeah, it is something that we're going to be continuing to talk about as we navigate the 2025 year. Talking of navigation, the Australian election just around the corner, and the outcome could have significant implications, especially for the housing market. Want to ask you about, there's a very real possibility of a hung parliament with the Greens potentially holding the balance of power. They have flagged major changes to negative gearing. I know this is one of your favourite discussion points. So perhaps just step over what they're proposing for the listener this morning.
Yeah, look, housing is looming as a big issue, and obviously there's talk of whether there'll be a hung parliament, and if it is a hung parliament with the Greens and the Labor Party, then the Greens are proposing some changes to negative gearing and capital gains taxes, which in fairness ultimately affect mum and dad investors, and they'll grandfather negative gearing and the 50% CGT discount to one investment property. However, it won't be going forward. If you buy another investment property, you won't get that negative gearing benefit and you won't get that CGT discount benefit into the future. That 50% capital gains tax discount will be scrapped, and any properties purchased after the policy commences or any second or subsequent investment properties would not be eligible for either of these concessions. So a really big disincentive for investors. Ultimately, it's going to flow through to supply of rental properties. In my view, not a good idea.
Yeah, well, I guess we're going to find out what the general public think about that, because people will be voting for it one way or the other. I was going to ask you just how that's going to affect property prices and investor confidence. It's going to be quite negative sentiment.
Yeah, look, I think it's really going to impact those mum and dad investors and their want to get into the investment property market. Over 30% of investment properties are mum and dads. They're not the big institutions. They're not the big investors building portfolios. So ultimately, that's going to have the impact of decreasing supply of investment properties, and counterintuitively, it's going to increase rentals. There's been some work done to suggest that it could cost renters more than $5,000 a year by losing that negative gearing benefit in terms of even more shortfall in supply of investment properties. And we all know the challenge renters have had in the last couple of years and the growth in rental prices over the last couple of years. So this is just not going to help the supply of good, strong investment properties into the future.
Yeah, it really is sort of shaping up to be a major election this cycle. So looking at the other major parties, what impact are they with their respective policies going to have on the housing demand, do you think?
Yeah, both of them have had major announcements around housing, and it's quite stark how much housing has come on the radar of the average voter, just people trying to buy a house. The great Australian dream of the 80s and 90s is almost out of reach for a lot of people now, and both parties have made announcements to try and look at how they can help demand. The challenge with stimulating demand, of course, is that it just further increases prices. But from the Labor Party perspective, their Help to Buy scheme, which they introduced where the government takes a stake in your property of the equity, they're going to increase the price caps to enable more people to become eligible. They're also going to broaden the existing 5% deposit guarantee scheme. From a coalition perspective, they're more focusing on ability buffer rate from 3% to 2.5%. They're looking to enable first-home buyers to use up to $50,000 in super. They've been talking about this policy for a while, and they've announced that as well. They're also going to let first homeowners of newly built properties make some of their interest payments tax deductible, so that could be up to about $12,000 per annum, limited to 5 years, against the first $650,000 that they've borrowed. So some initiatives there from both parties focusing on demand, the risk obviously being we increase demand, we keep driving up those prices.
Yeah, and I know that you want to talk about the supply side and what solutions are currently being put forward from a political perspective and whether or not they can realistically improve the availability of housing. I mean, it's just such a political football as we talk about month in, month out, but we are down to the wire now with the election looming large.
We are down to the wire, and supply is the big issue. This is not a short-term issue from the last couple of years. The high migration numbers that have come in, a number of factors have made it more of a challenge, but this has been brewing for a number of years and no one's really resolved it, and I don't really see any political party resolving this in the short term, local, state or federal. In fact, the Labor government's talking about keeping their Housing Australia Future Fund going with $10 billion investment to social and affordable housing. That's a policy they announced when they got into government, and they haven't built one house. They're still also trying to deliver their 1.2 million homes in 5 years. We're on track to be behind some 400,000 homes on delivering that. And they're also looking at investing $10 billion to build another 100,000 affordable homes for first home buyers. So there's some initiatives there from the Labor Party. The Coalition's committing $5 billion to Housing Infrastructure Fund, helping to build 500,000 new homes and new developments. They're also both stopping migrants or immigrants purchasing properties for 2 years to free up supply. But supply is a broader issue. There's issues at state government level, there's issue at local council, and there's issue at federal government level with supply change, with Labor, with getting caught up in red tape. So supply is a major challenge that I don't think any political party is going to solve over the next political cycle.
Yeah, well, we don't have long to wait, of course, before the general election hits us and we're in those polling booths across the country. That'll do us on our Saturday morning. Enjoy your weekend there, Anthony, and thanks for getting into the car and managing to connect with us. Very much appreciated.
No, not at all. It's a big issue on everyone's radar, so happy to have shared all of that this morning. Enjoy the rest of the weekend, everybody.
From the emotion of property, The economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
And we are in Sydney talking to Angelo, giving us the rundown of Elizabeth Bay, Rushcutters Bay and Potts Point. Are there any better on offer? And Angelo, it brings me back to this whole thought process about King's Cross and the transformation, particularly over the last 20 years, because it's been rather significant for the real estate industry.
Yeah, it has been huge. I mean, I started just after 2000, being a kid going out and clubbing like all, many others in those early 2000s period. But I mean, prior to my time, it's had many different lives. But, it was over 10 years ago now when we had that, one hit punch that really changed the area. And there was a couple of developers that, backed themselves and were the first ones to say, well, look, these properties can start to get some significant values. And now all the clubs are gyms and, you've got the old video easies turned into, 1-2 chef hat restaurants. We've got just not what it used to be. The alleyways where I used to be, getting cash for rent in the back streets and finding syringes in poles are now coffee shops and, billionaires sitting next to, young entrepreneurs, let alone everybody just all mixed in there together, which has really made what it is today and still quite a diverse marketplace. So it's got another 10 years ahead of it, which is going to see another big change with some significant developments coming in and, $30 million and $20 million being the new norm for some of these downsizers, and there's about 30 or 40 more of those to come. So it's not what it used to be. We've still got a few clubs. We've still got, believe it or not, one of the streets, Kellett Street, we've got a strip club on one side, a brothel on the other, and then we're selling a one-bedroom in the middle for $2.5 million. So no one's too fussed about those anymore, and they love the fact that that's what makes the area what it is.
That is very, very diverse, and you just took me back as soon as you said those two words, video easy, hey?
Yeah, I know. Well, it was video easy. It was, it used to be that steak place. Can't remember what it used to be called, but we've got a few, establishments that have continued on for the last 20 years, but now we've got new staples in the area which have really taken over. And nowadays it's, want to have a cocktail or somewhere to eat. It's, walk up and down Mackay Street and, take your pick.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
Yeah, first home buyers are quite a big portion of our marketplace, particularly at the moment. I am finding that first home buyers definitely have options. So our stock numbers are sitting slightly higher than what they once were. For instance, on average, we usually put 250 odd properties on the market every week, whereas last week we put on over 400. So there is quite a bit of stock for buyers to pick from.
Look, fractional ownership is the same thing. Basically, co-ownership, syndicated ownership just indicates that you are an owner. In our circumstance, you are an owner on the title.
Tell us a little bit about that rule change.
Yeah, look, it's interesting to watch play out. Most intelligent people that I've listened to about tariffs are all of the understanding that it's not going to achieve the outcome that he's hoping for. So then you have to wonder what is the actual outcome that he's hoping for, which we spoke about off air earlier, and wonder whether he's actually playing a different game for personal benefit and benefit of his friends.
I think real estate has incredible opportunities, but I think that there is a misconception about how quickly or potentially easily people can get to that top percentile of agents operating. It takes them a lot longer than I think what they anticipate to get their momentum going. So you've got to learn the right habits. You've got to set yourself up correctly from the beginning if you're going into sales. And then you've got to build, a digital footprint. You've got to get to know the community. You've got to learn how to transact and negotiate. So there's quite a lead time. I think it looks quite glamorous from the outside. It's a bit harder than I think what it looks like for those coming in.
We connect you to the best real estate information across Australia. The Real Estate Podcast.